There's a lot of people who say cycles don't work. They are, in my opinion, very valuable. I've just become fascinated by the ability to see these things. But it's very polarizing. In Britain, we have a thing called Marmite. If you're in Australia, it's called Vegemite. You either love it or hate it. You know, it's not for everybody, but I enjoy it, and it does work.
Welcome to the Dwayne Kerrigan podcast. I'm your host, Dwayne Kerrigan. And after 39 years in business, 31 ventures in 14 industries, I've learned a lot. And on this show, I sit down with exceptional entrepreneurs to unearth entrepreneurial gems, learn from their experiences, and get educated. Hey, everybody. Welcome to the show. Thanks so much for tuning in. If you didn't catch the first part of this episode, go back to last week, take a listen. Here's the second piece. We hope that you guys are getting everything that you need out of these conversations. We appreciate you tuning in and listening and sharing and subscribing and all that kind of stuff. Thanks so much, guys. Have an amazing day and week, and we will chat with you soon. Enjoy. If we cycle back to the petrodollar, the strength of the US dollar, the dominance of the US dollar, what is digital currency, and how do you tie cycles into a digital currency? Like, I feel like that has the potential for some significant impact.
Yeah.
Which obviously affects economics. It affects business from regional to national to international, debt around the world. What are we looking at there?
Well, I think this is a tough call, and I think we spoke about this last time. I think the BRICS nations would benefit from a centralized digital currency, because they'd all then be having the same currency as you know, and that would be a potential competitor to the dollar if it was backed by something. Bitcoin has, hit up at 128,000, 125, 128,000, has come down to, less than half of that. I still think it's got a place, because cryptocurrency overrides any boundaries, as it were. And government investigations, etc. It's very difficult to know who's holding what, where, and where it's being transferred. And then, of course, you don't have the fees, which historically the banks and the SWIFT system and everything made a huge amount of money from. So I think it's got a place to stay. I don't really understand what it is, even now, having looked at it time and time again. It's magic money. It's thin air, right? What is it? Yeah. I mean, you told me. It's like,
I don't understand it. So that's why I'm asking you, because I don't know how, unless somehow they back a cryptocurrency with gold.
Exactly.
And try to, which I think is probably close to impossible, which is, gather enough nations together with gold and really back it up and forge some type of universal, cryptocurrency or digital currency. I don't know how this plays out. And then do we get into this, another financial war or currency war around who's going to be the dominant currency, who's going to deleverage their debt first, who's going to, flip it, who's got the balls to actually devalue their currency and then start again with a new digital currency. I'm not an expert in this, so I'd love to hear the conversation.
Well, these are great questions. So I think you and I both agree that there is no intrinsic value in a cryptocurrency. Yet there are people who have made billions out of it, right? Mm-hmm. That's the first thing. We set that aside. What's going to likely happen? Well, the US dollar is still the best house in the worst neighborhood, I guess. It's still there. It's still dominant. It's going to be very difficult to depose that. Well, we might see some change is that when we go back to our 100-year cycle and we look to see what happened in the early 1930s, numerous nations came off the gold standard. And one of those was the United States of America. Was that 1932 off the top of my head? I'm just trying to think. Britain came off. Several others did, I think. And therefore, when we get to the 100-year anniversary from that, which is only 5-6 years away, we might see some challenges then at that point to the US dollar. That will also align with cycles unfolding from when Nixon left the gold standard as well and broke up the Bretton Woods Agreement.
Right, which was 72, wasn't it, or something?
Yeah. So it's a 60-year cycle, but I don't want to, brewed too many more cycles for everybody. But yeah, that's and that. I mean, that's a very important one economically. It's the K wave, the Kondratiev wave is the 60-year cycle, 55 to 60-year cycle. That's a very dominant one. So it's very prevalent in markets, in commodities, in everything.
What's the argument to, I mean, digital currency at some level seems like it makes sense. I mean,
Yeah.
Whether they do it geographically, like I know a long time ago, there was an Amero and then the euro dollar, and then which has now had its issues. Like when we look at currency around the world, and how we interact with with the onslaught of technology and AI and all this kind of stuff, and then now, I mean, introduced to the conversation with agents, bots having the ability to interchange. Now they're now, I forget what the statistics are, but they're really growing in regards to how much money bots are actually now spending on behalf of their, it's, wow. I mean, they have their own accounts now. They're was it Argentina is just now allowing legalize like a bot and a company that's run by bots, and it be registered to a digital kind of identity rather than a human identity. Like this is starting to shift, and it's once one person starts to do it and they go, oh geez, like look at the economics that are now flowing or could flow potentially to Argentina. I think it's Argentina that's doing it.
I wasn't familiar with that, so I can't comment on that. No.
Yeah, no, it's just mind blowing. Like when you really kind of try to keep up to what is happening and how fast it's happening now. Like this is and then actually that'd be another question I have for you is like, with the speed of technology and the speed of what AI can do, does like you talked a little bit about compressing cycles and expansion of cycles. So does that compress cycles? What do you have any thoughts on that?
Yeah, I think I actually put the whole thing down as a new technology. So I don't think the cycles are going to change. We will discover new things constantly. That's what we do. It's just the impact of this. I mean, go back just 5 years, right? Let's go back 5 years to NFTs and all these sorts of, what's happened to them? They've all disappeared, right? People paid millions for something that's worthless, right?
It was like air.
Yeah. So, that was the latest thing. And I remember people saying to me, yeah, well, get into this. Why aren't you buying stocks? I just don't get it. If I could understand it, am I missing something? It's kind of like, and I still feel the same about crypto and Bitcoin, but I do in fair, just have to say I do have some. So that was something that got into earlier on. So that's a buy and hold. But I do think there's a place for it because it avoids scrutiny. You can move money around without people knowing. And therefore, that's always going to have some sort of place.
Dude, I'm with you. Like, I don't know. I really do not understand. And we have a mutual friend who really was pushing us, back in what, I don't know, I'm going to make up a date, but maybe I'm thinking 2012, 2015 to get into Bitcoin when it first kind of came out, or a little bit after. And, now hindsight, I like, oh shit, I wish I would have got into Bitcoin. I could have bought it at like $60.
Yeah.
Woulda, coulda, shoulda, but I still don't own any. I still don't own any crypto because I just don't know. I don't know how it applies to me right now in my current situation with my business and, our businesses and how we execute and what do I do with it? I don't understand it. We should probably have I need to get a cryptocurrency expert onto the podcast, actually. There's so many rumors about, and it's Trump's got his own digital coin and all that kind of stuff. So does he, he's bold enough to make a move towards digital currency, but can it be done in one administration? I don't know if it could be done in one.
Are you talking about as a national thing? I mean, Trump's one thing where, I don't know what happened there, but they made a lot of money, several billion. And I don't know if that was because they launched it and they took the money and got straight out, or whether they're still holding it. I don't know. And that's, just one of the features of this administration where they will look at these opportunistic entrepreneurial ideas. With regards to a bigger nation, I think at some point this has to be the case. That I think they would have to look at this. America, and I think this is going to be the big thing. If we look at, if it's the BRICS nations as a group, if they get in there first, then I think whoever gets in there first with something will have something, even though it's all, in the ether, in the cloud, whatever, It's not like we've got it, you've got a gold block in your bottom drawer or whatever, or anything like that, or whatever, or a stack of notes under the mattress, whatever, So
yeah, like I'm no expert in this, but I mean, I can see like, oh, if you wanted to replace the US dollar with a US digital dollar, like, and you're taking on the same debt and everybody gets I can see that kind of doing it. But what would be the point? Would not the point being to re-leverage a digital dollar be to, in the process, wipe out a bunch of debt that, these countries have so much debt.
Exactly. That's it. Suddenly debt could be wiped out just by devaluing, revaluing, just like that. That's it. Yeah.
Well, and so in regards to cycles, is there a financial cycle that you guys follow and track, and would that lead to some indication around a digital reset for a country?
I think, well, my direct answer to you is there will be a cycle. My honest answer to you is I've not spent a huge amount of time looking at that because we don't have other reference points to go back to. I did try looking at this. There was a coin issued just around the 1780s. What was it called? The something dollar. It was basically issued to pay soldiers fighting the Brits after, going all the way into Yorktown. What's it called? The continental currency. That's it. The continental currency. And that actually was issued, and that devalued very, very rapidly. That was it, the continental. So that was that. My honest answer is there will be stuff there. It's not something I have got a handle on right now, but I'm going to make a note of that and take a look at it.
Well, maybe we get somebody on the podcast to help us, and we do a little panel on it, because I think it's a necessary conversation.
Yeah. What I would say is that I do see threats to money as we see it as we get to the early 2030s, definitely. So we're not far off.
Well, and I don't know how much you know about this, but here's another one to throw in. And so I've been listening to a couple of guys talk about what is the future of, the monetary system itself, where, is the currency that we currently realize today and utilize, is it going to be the currency that we're going to use in the future, or does currency become energy or data usage, or, do we replace currency completely? That wouldn't be uncommon. Like back, there was barter days, which there was no currency really. And then, you bartered, and then we went into this phase of some type of coin, paper, currency trading for value. Could we go into another type of barter system in the future? I don't know. And then what does that do to the wealth that we, you talk about, they talked to Elon Musk about it, and they're like, oh yeah, you're going to be a trillionaire, and moving into the future where being a trillionaire is not going to mean anything because it's going to we're going to be using something else for currency.
Right. And that's the whole point, isn't it? So currencies by the West, by pretty much everybody, have just been abused now. They're printed and printed and printed. And now, how many places you go into where you can't actually pay with cash, right? In Britain, there's a lot of places nobody uses money now, as it were. So it's a ledger. It's a ledger in cyberspace, right? What happens if cyberspace wipes out? That's it. What do you have? So ultimately, the only things you have is the land. You have the ability to feed yourself if you grow food. And if you're doing that, the ability to protect that land and property and from everybody else that's going to be wanting it when they have no money or no food. And I think that's an extreme scenario, but it's a possible one, because everything could be wiped out. Everything we've all trusted, we've had no choice, but it's subtle, right? Everything's incremental. First it was coins, and they're like, oh, okay, that coin's out of business now. Now this coin's out of business. Then these notes are out of business, and so on. Where'd you keep them? Well, you don't want to keep them at home because you're not getting any return on them. Put them in the bank, and you might get, 1, 2, 3, 10%, 1980, 81, you might get 14% sitting at the bank. This is like, well, that's pretty cool, right? And you could still go and get it and you could spend it and it was tangible. Now everything's online, right? So net worth is online. And what if all that failed and disappeared? Everything's become hypothetical. That's an extreme scenario. I don't want to upset everybody listening in, but it's worth a thought. I find all this has gone to real extremes, but I'm sucked in with it. That's it. And that's it. I'm in the game. I don't have any other option. So
I think that's a really good point, is like, I think you always have to have a healthy amount of optimism. You have to have a healthy amount of skepticism. And then you have to really figure out, how do I balance in between the middle of those two things? And I'm going to be honest with you, and I'll say this out loud. It's like, personally, having access to the market timing report does allow me to kind of look at the trends and predict the road ahead, have an understanding of where we are, where we might go. And it allows me the information to make, decisions, or at least look towards a direction. And that's where it's been useful knowing you and having that conversation. But anyways, I'm just saying that, again, we'll get Andy's, at the end of the conversation, we'll get all of Andy's information. You guys should check it out. Maybe we can convince him to set a trial up for some people, like with a code, or I don't know if we can do that. I don't want to put you on the spot.
Sure, we can do something for sure. Yeah, we do actually have a trial. People can try it for 28 days and see, get a couple of reports there and see if it's there. And part of the report, we'll have a geopolitical commentary in the first part, and then we look at where markets might turn, and we look at gold, S&P, crude oil, and Bitcoin, dollar index, and euros. So those are the main markets. So for traders and investors, really, that's that. But the first part really helps everybody out in with regards to business strategy, that sort of thing. What's happening next and why it might be important.
Well, there's two pieces of that. There's the piece, obviously, most people who listen to this podcast, have a business, or they're desiring to own a business at some point in time in the future, or they're a leader inside a business. But they also then, there's also people who are invested in the markets. And in order for you to have an intelligent conversation, like, you cannot nowadays give your money to a guy at the bank, or a financial, whether they're a fiduciary or whether they're an investment planner, whatever you've got. You got to be able to have a conversation with intelligence about your money. You just cannot hand over your retirement savings, or what your plan is for your future, to somebody and not be informed. And so, one of the things that I've found, I guess it sounds like I'm pitching you, but it's not my intention, honestly. But it's like, it's one of the tools that your ability to be able to have an intelligent conversation with your investors. So they're like, okay, like, I need to think twice about what this guy's saying. And I literally just had this conversation with somebody who's retired, and they got a whack of money in the markets. And we talked about, we can talk about this if you want, because you are in the trading world.
Yeah.
But we talked about, the risk bucket, the wealth bucket, the safety bucket, the dream bucket, right? These 4 buckets. Don't know if I got those exact, but whatever buckets you have, it's like, well, where are you reallocating? Like, because one of the conversations I said to them is like, look, you don't want to miss the boat on some of this, like this AI stuff, like SpaceX. It's like, well, when do you get into SpaceX? Like, getting in right at the launch of the IPO is like, that's a gamble that's going to bump up higher, and it goes up by 20%. You sell it, maybe sell most of it, keep a little bit, let it drop back down, because that's kind of what happens with IPOs. It's got a bit of a cycle to it. And then, when do you buy in, and what does that look like? And should you be in part of SpaceX? Should you be in Anthropic if Anthropic goes IPOs, whatever other technology stocks there are out there? And, but what size of the portfolio should that be? And then how do you recalibrate the portfolio? And so I think, having that is really interesting stuff. I'm happy to hear you comment on it.
Yeah, it's a tough call. I think you got to understand your own risk tolerance, and that's different for everybody, right? Some people are just born speculators. We the market time report caters for people who are trading as well as investing. So there are some people who want to be in and out and trade the futures markets or the ETFs based on that. But it's the idea is that if you can make some money supplementing your profession or whatever, if that's what you want to do, or that is the basis of it. Again, it's the hardest thing about trading and investing is risk management, and it's the most boring thing. People just don't want to talk about it. So one of the things that I was running a hedge fund over in Northeast America for several years, and one of the things we did, we had a very strict operational structure based on checklists from a flying background and so on. And the idea is, well, people want to know when can they get in? When should they get in? Which is what you've just asked. And I use a lot of geometry in trading and investing. And we put the same techniques I used, we put into a course called the Market Time Report Trading Course. And the reason I mention this is that within that, we show you how to look at a market. We show you where the key price levels are likely to be. And we show you how to manage the risk to get in, because you want to be able to protect your risk. And that's the whole idea, is the idea of a stop loss or when to hedge your position if you're running professional money and so on. So the idea is that if you think you want to get in, what is your risk tolerance? Where do you think it's going to head to the upside? And we have the tools to be able to decipher that and manage and place the risk. So what I would say is whatever you do, when you get into something, let's face it, Joe Public tends to get into things just as they're approaching the top. So they might make a little bit, but then the downside is huge. So it's the ability to protect that downside. But the better thing is to be able to get in as something's about to happen. And that's something I can talk to you about in a minute. And have a minimal risk exposure to be able to stay in something that's potentially going to run up for a while and make you a substantial return on your initial investment. And that's the key point. So it's the ability to how you manage risk and how to operate, and to have the mental, the mindset to be able to say, this isn't going my way, I'm getting out of it right now, and to take, to minimize your loss. And that's the whole point. That comes down to risk reward ratios. So you get in, and having a system then means actually it's your stop loss has been hit. You have lost some money, but it is only, this percentage or part of a percent of your portfolio. Therefore, you've done well, you've managed it. Equally, some of those will run, and suddenly maybe they've added 3 or 4, 5, 10%, or even more to your portfolio, all before a minimal risk exposure. But that's what trading and investing is. It's the ability to try and get in, and we use timing to try and get us an advantage over everybody else. And one of the things that we do regularly is use seasonality in markets, because a lot of markets have seasonal trends based on history. That's it. You're trading history. You've got the odds on your side. It's like when you go, we talked about Vegas earlier, you go into a casino. Whenever you walk into a casino, the odds are against you. That's why casinos exist. If you look at a roulette wheel in Europe, it's against you by one number or one pocket. In America, it's 2, right? And whatever you do, it's very difficult to beat the system. You can kind of do it in blackjack to some extent, and so but for the vast majority, and maybe craps to a very small extent, but otherwise everything else you're going to lose at, because they just loaded against you. That's the whole purpose of it. But they also want you there to be to not just come in, lose all your money and leave within 1 minute. They want you to hang around, so you will get something back every now and then just to keep you excited. That's a casino. The odds are against you. We're talking about, trading and investing is a casino as well. But there you can get the odds on your side. And this is where we talk about seasonality, for example. We know that there's 9 times out of 10 there's a Santa Claus rally at the end of the year in the Western markets. We know there are times of the year when gold makes highs and lows, where there are up spells, down spells in crude oil, etc. Some of these instruments have very, very pronounced, like 90% probability. So we've programmed all that using AI, and that just gets the odds on our side. But what I want to say to people, if it is trading and investing you're interested in, get the odds on your side. Find something that works, And another thing we look at is the long-term movement of money. The smart money has to be reported every week to the CFTC in America. The hedge funds have to report what they're buying and selling. The hedgers, the producers have to report what they're buying and selling. And then they also look at what the dumb money is doing. And the smart money is probably going to be right. The hedge funds follow the smart money, so they're right some of the time, but not at extremes. And the dumb money is always wrong, 90% wrong. So when you see all these moving in certain directions and they're basically effectively aligned, albeit moving in different directions, they're all telling you the same story. Suddenly you've got the odds on your side, if that makes sense.
Mm-hmm. Yeah. And I think, to your point, there's a lot of people who are trading privately that they catch a trend and think they're a genius. But that's really like, if you stay, it's like being in a casino. If you stay there long enough, they'll get your money back. And so, I got a couple of buddies that, and look, right now the trend is your friend, right? It might be rolling. Do you think what's your take on the markets right now?
Right now? Okay. Just before that, I just want to say there is a saying that you've just alluded to. It's called, don't confuse brains with a bull market. Okay. All right. Let's just get that one out there. Right now. Okay. So what we can tell you is the following. The S&P 500, so I'm going to talk about the S&P 500, made a high on the 2nd of June. That came in on a cycle top. Our readers were prepared for that, as we had big cycles at the end of May. It hasn't quite taken that out, but the Dow Jones has, as the NASDAQ. I think this is a top, a bit of a breathing point, but I think we are in a bigger picture looking at a continued bull market. Now, there was a guy called Edgar Lawrence Smith who wrote a book, I think in the 1940s, maybe 49, called Tides in the Affairs of Man. And he looked at the patterns in the Dow going back, and the Dow had only been going since 1895. So he looked at reconstituted indices during the railroad booms and so on in the growth of America. And what he found, even back in 1949, that years ending in 5, so that would be like 1995, 2015, 2005, 2025, tend to be very bullish years ending in 5, right? Years ending in 7, and years ending in 6 are bullish. So we got a big up year, right, last year. Years ending in 6 are bullish, but not as bullish as years ending in 5. At the moment, we're at new highs. So I think we are going to carry on up to make new highs by the end of this year, but we might see a pullback. And sticking with his work, we saw years ending in 7 tend to see a crash, and can be down years, but they will see big corrections. So we saw that in 2007, we saw that in 1987. And in fact, it's happened in every decade in the last 120 years, apart from 2017, where we actually didn't really get any correction. So what are we saying? 2027, next year, we'll probably see a correction, right? And then we tend to see big runs towards the back end. So years ending in 9 tend to be fairly bullish. And that, of course, think about 1929. That was straight up, right? 1999, straight up, that sort of thing. So that's just a rule of thumb. Now, the smaller cycles will dictate whether they're going to work as well or not so well. So the answer to your question is what's happening with the markets right now. In my opinion, we're seeing a correction, a small pullback, maybe a little bit more of a pullback on the S&P 500. And then I think we'll see it pick up as we get to the back end of the year. But I do think that because we're going to approach the 36-year anniversary from the 1st of August of Saddam Hussein going into Kuwait, I think there's going to be more challenges in the Middle East that are going to make markets more volatile.
So in years ending in 7, for the last 120 years, so you've got
12 examples,
12 examples, 11 out of 12 had a would you say a significant pullback, or what?
Yeah, they've all been fairly significant. They haven't all been crashes, but they have seen corrections.
That's crazy,
right?
Now, probably not mutually exclusive just to the years in 7, but when you're looking at it from a trading perspective, that's interesting information to make some type of probability judgments about where you might want to put your money, for a year.
Absolutely. Yeah. And this applies to all sorts of instruments. And then, within our seasonality platform, more designed for shorter, not intraday traders, but people trade over a few days and weeks. We see things like there are setups where typically certain markets, I mean, there's one particular market that has a 95% probability, if it makes a low round about the 1st of July, rallies into the 17th of July. And so if that's happening, then that's something that you can harness.
You were on the show October 24th. It would have been nice for you to tell me that the years in fives had bull runs. I would have appreciated that. I would have appreciated that.
You didn't ask, I guess.
Yeah,
you only got to ask. I mean, the things we have so much to talk about, you and I, Dwayne, that we never stop, right?
I got to learn to ask better questions. Yeah. That's my problem.
Yeah, our mentor taught us that. Ask the better questions. That's it. Yeah.
That's exactly it. You'd think I would learn by now after 3 years of doing a podcast. No, it's funny. It's interesting because I'm actually, while you were talking about it, I pulled up my chart on the S&P. And like right now, it's like if I'm trading this, like I'd be cautious because it looks like it's a bit of a sideways triangle, or there's obviously some consolidation in the market right now for what looks like the last month.
Yeah. And I think, so what had happened was we made that pattern there, and I just did a brief presentation day before yesterday to a bunch of traders online, and we were seeing a diamond pattern coming out. So, and that can be very bearish. That's indicative of a major top. But then this week we broke out from that, but we've now headed sideways. I haven't seen what's happened in the last few hours, but basically we haven't taken the high yet in the S&P. Therefore, we still have to be cautious. And this is the point of what we do. There was a major cycle for the last week, the very last few days of May. So the idea is that when you see these time patterns coming in that we publish, if a market's heading up, that's when you want to position or protect your position if you're long. So that's when you'd say, I'm going to tighten the stops up, or I'm going to take it off the table, right? Because at that point, the winds are now blowing against you. And that is the key advantage of this stuff. Whereas somebody might say, well, I'm just a buy and hold guy. I bought back in 2003 and I've just been long ever since. And that's great. So, and now they're up 18%. But I tell you, they were probably sweating a little bit when during the global financial crisis, when the market halved and the S&P went all the way down to 666, and the same again, the pandemic, we got a short, sharp shock there. It was only 1 month long there, but yeah.
Yeah, but I know people who were like selling out of positions like crazy and then didn't buy back in because they thought it was going to go down farther. And if you're a trader, like you should have the market timing report, honestly. Like I can't even imagine like you wouldn't. But if you're a long-term investor, how would this might change your conversation with your investor, or and how and where you put your money? Like we've already covered real estate, right? So REITs might not be. I mean in Toronto here, it's condo pricing has been under pressure for a long time. It's like a crisis here. But what kind of conversations might you want to have with your investor at this stage, given with the information that's coming?
Okay, so let's first of all just put the disclaimer in there saying this is not advice. These are just my thoughts. So whilst gold has made a major high, I do think it's going to go higher, and I think it's going to go up to 6,900, possibly by the end of the year, or certainly within the next 2 years. I do think that's the case. Oil, if we get a further deterioration in the crisis in the Middle East, it could go up to the old double top of about $146 to $147. And after that, I have a very clear target at $183. Now, the ramifications of that are significant, because if oil did trade up there, which would be 3 times the price it's at now, that would have immense economic ramifications there. But that's an extreme. What I do think, and what I am looking at myself and with my consulting clients, is that I believe we've already seen it in some areas, but we're seeing a pretty big, I think we're about to enter a multi-year commodity boom. Now, one of the cycles I alluded to, I've held them back a little bit, the 60-year pattern we talked about a few minutes ago. We talked about Bretton Woods 60 years on, giving us a window in the early 2000s with regards to the currencies. What we can look at there also is that if we go to the very late 1960s and 1970s, the beginning of the 1970s and so on, we saw some huge cycles coming in on wheat and grains, wheat, corn, soybeans. Now, what happened there? There was a famine in Russia. There was an embargo between America and Russia, and also there was a currency crisis. So with everything being traded in US dollars, a weak US dollar will lead to higher commodity prices. Okay. I think that cycle of a bigger move in commodities is going to repeat. We also talked about the 90-year pattern. If you go back 90 years, so remember how we looked geopolitically back 90 years. If we look back at grains and what happened 90 years ago in the Midwest, we had the Dust Bowl. We had a failure of crops. So we could argue now fundamentally that the closure of the Strait of Hormuz or the restriction of traffic through there has seen a lot of fertilizer not being delivered or even produced. That is critical. Now, I have in my grain consulting, grain reports, I have a series of farmers predominantly in the Midwest. They got ahead of it and they've already got their fertilizer sorted out before it went racing up for the short term for the next year or so. But they are now wondering about what to do for the following year because that's going to be an issue. So 90 years ago, issues with crops came from the Dust Bowl. This year, it might just be due to the lack of availability of fertilizer. And then in my research, which I have to say is probably a little bit extreme, I did notice that there had been some crop moves 100 years ago. 2027 saw some moves in various prices of again, grains and cotton in America due to the flooding of the Mississippi River. So are we going to see maybe a drying up of the Mississippi this time? All right. So I know this is getting crazy, but these are the factors I take into account. I am now seeing 60-year cycles directly related to it. And I'm also seeing logistic cycles with the inability to navigate the Mississippi, which is a way that these crops get moved out and then in itself creates a transportation crisis. So my view is that there is some considerable upside to come within the grain markets in the next few months and years.
It's so interesting. You said it because I'm thinking, man, if I'm a listener and I'm driving my car right now and he's talking about a cotton thing or something that happened 100 years ago, like what the F does that have to do with what's going to happen next year? But when you start to line all these cycles up, again, we're talking about probability, right?
Absolutely. Really absolutely. Yeah. Yeah.
Mm-hmm.
Because you see, Joe, public's not going to know about it till they're paying $10 for a loaf of bread, right? And they're like, how did this happen?
Do you have well, I mean, and that's true, right? So, I mean, or they can't fill their car with gas.
Yeah.
Like I was supposed to go to Australia for some meetings back in May, and I was talking to some friends over there, and they're like, fuel's like $12 a gallon over here right now. And I'm like, really? And they're like, why? Come another time. Like they were talking about sanctioning jet fuel and limiting petro purchases at fuel stops. Like there was a lot of that talk going on at the time when we were kind of planning to go there, but it never happened. Because we were just like, well, like, why are we going to bother going if there's the possibility? I'm not booking a month out to go to Australia, and then there's all these restrictions. Of course, it never happened. But you were talking about gold. I popped up the chart of gold. I mean, it's down like 30%, no?
Yeah.
Since so what was its peak in February?
I think 28th of January. So yeah, good enough. February. The big cycles, the big monthly cycles came in February, and also we see seasonal peaks around about February in gold anyway.
Oh, really? So that rhymes with it. So your patterns.
Yeah.
I mean, dude, I remember when we first met, and you would explain this stuff to me, and I knew absolutely nothing about. Like, I had not traded at that time. I hadn't. Like, I was a moron. Completely uneducated about it. When you would talk, I'd be like, what is this guy talking about? Like, this doesn't make sense.
Probably what we were drinking.
Well, that too. Yeah. We could have been a few whiskeys deep. But here's what got me onto it. And then later got me, I think, into trading as well. And which I don't do really actively anymore, was getting to know you. And I'm not fluffing your feathers here, but how smart you are and how committed and dedicated you have been to the art of cycles. And then the other bigger piece for me was just how authentic of an individual you are. Like, you're not out trying to, make money off of people. Like, you are like one of the most truest, authentic people I know, and really come from the aspect of trying to help others. You're not coming at this I know you're not coming at this from the aspect of making money. You're coming at this from the aspect of, how do I help? How do I use this, what I've dedicated my life to, and the research that I've done, to be able to help people. And you probably have about as good of a business model on this, probably better than mine on this podcast. Like, I sell nothing, I do nothing, I don't promote anything. Like, it's a horrible business model, and sometimes I wonder if you're probably a little bit the same. So, anyways,
I think it's just a fascination that history repeats, and it can give you an advantage. I know it's not for most people, but for those who are prepared to listen, and we're not always right, but for those who are prepared to listen, and you can help them out, and you can, it's the early warning system for a tsunami or an earthquake. It's like, something might be happening. You just want to look after yourself here and so on. Or the other side of it, the positive is, this might be happening, and we should just hop on that bus and get down there, and to take advantage, or just have fun, So it's this idea that you feel a little bit more certain about everything because you can see what lies ahead. And to some extent, you've still got very much, and I think it's a very important thing to say, that we still have free will, okay? And whatever you believe you can do. So you've still got that. It just is an extra tool. In fact, I wrote a piece way back in the late 90s for a mainstream newspaper in Britain, where they said, what all this stuff, isn't it a load of nonsense? And I said, well, just assume your mission is to cross a minefield. You have to walk across a minefield. Would you rather do it with or without a map of the minefield, right? Well, you're better off with a map, right? So now you can maybe walk around them. But you still have free will, and if you were so inclined, you could still step on a mine if you felt that way inclined, right? So it's there. And the idea is that it's a map. It gives you a little bit more of a vision than other people see, because people have this herd mentality, and they're only going to listen, especially now, especially with the youngest generation, where the attention span is so minimal with all these apps and TikTok and everything, and there's such a lack of interest in what's really going on, So I just think it's interesting. It's fascinating to be able to help people out. And it's just incredible where you can see things are about to unfold.
Yeah, I love it. Dude, sorry, I was scrolling on my gold chart here. But no, you're right. I mean, why would you not have the information? It's like, guys, it's your money. Long-term, short-term, trader, business owner. These are all things that are affecting us. And I'll just say this too, is like, Andy's not the only guy that does cycles. Like, he said it on the podcast. If he rhymed off 3 guys that have books, that if real estate is your thing, you can find some guys. And I'm sure if you reached out to Andy after this podcast and you said, hey, this is the industry I'm in, and I got to know more about these things because I want to be informed. And then, and I do actually want to talk to you about how you think AI plays into this. And then
sure.
I don't know how long we've been talking, but it's got to be a while. So I don't want to drag you on.
I'm happy to stay. We don't get to talk that often. So when everybody's had enough, if they haven't fallen asleep, you just let me know.
Well, but so gold,
yeah.
Like, you just said, I think you were calling a top of 6,000-ish or whatever it was.
6,900. It'll be an interim top because, if you go back to 2001, 2002, Gordon Brown, who was Chancellor of the Exchequer, i.e. the finance minister here, he sold the gold at $292. All right, $292. So now what is it at? It's been up to
500 now.
Yeah, right. So, it's always going to carry on up. That's the way, price-wise, things are going to head up. I think what we are going to see is 6,900 is a good target in the interim. And, if you're in your 20s, 30s, and you're holding gold, you probably hold it forever. That's it. Until you need to cash it in, until you need the money. Remember, we're trading these things. Money's a means to an end. It's a transactional thing. You got to spend it on something. You got to enjoy it, right? So, yeah, I do see that. I think say 6,900 is an interim target on gold, but I do think that's probably going to just keep going up and up.
I mean, it's 41. I think it's $4,127 right now, or something like that. Like that's kind of I glanced at it through foggy glasses here, but I mean, that's a big call. Like that's a bold call. Do you see it going down before it goes back up, or?
Yeah, I think so. So what you have to understand is that markets don't just go up in straight lines. They do in the final move, like they come down in straight lines in the final move. That's when extreme sentiment is in. But what you'll find is they tend to go up, pull back, go up, pull back, and so on. And there are certain amounts that these pullbacks, sometimes you'll see a 50% pullback or whatever. And that's quite often a strong, what we call support level. And often then, if you know how to protect the risk, you can buy at those sorts of levels. There are other levels based on Fibonacci sequences, again, another mathematical proportion. So, a lot of these metals will pull back 38.2% or 50% or 61.8%. And then if they tie in with our time cycle for us, that's when we'll look to act on those. We'll want to see some timing in there as well.
Sonny, you talk about the Fibonacci retracements and stuff. Like I had a conversation once with a trader who traded off of technicals, and they're like, well, I don't do that. We had talked about fundamentals and talked about cycles. And they're like, nah, I don't use that cycle shit. Like I'm a technical trader. I'm like, well, it's all math. Like, isn't it kind of the same? I mean, I know it's different, but it's like you're making your decisions based on technical, which is based on financial, formulas, and cycles is a mathematical equation over time. They're just.
So a lot of when you talk about technical trading and technical analysis, a lot of the indicators that are used are, they've all got a mathematical formula. That's, by definition, right? But they're quite often lagging, i.e. they are based on what has just happened, not what is about to happen. And that is the difference of cycles. Again, mathematically, we've talked about a lot of long-term ones here. They are mathematically forecastable, right? So they are, in my opinion, very valuable. And that's what we do, especially when we break them down into fractal patterns and other much smaller cycles, which enable us to identify things down to a day. There's a lot of people who say cycles don't work, but that's because they've never put the effort into to establish that they do work. And even, I think there's a Harvard survey as well, a proper Harvard paper saying market timing does not work. Well, I would have to disagree with it. We've proven it time and time again in the I can't remember, is it 14 years we've been writing this report publicly, available to the public, which was something we never actually wanted to do, but people wanted it. We're quite happy trading our own money, just doing that, and we still do that. So this is more there available for that. But we've got now a track record of 14 years. We haven't got every single high or low, but we've got the vast majority of them. And when people say you missed this, you missed that, and so, well, which ones did you get, and how did you get them? And it's like, well, oh yeah, okay. It's all relative. If you're in a herd of antelope in the jungle, and the tiger sees you and he starts running, you've only got to be the second weakest runner because it's the last one that's going to die. So, there's not a lot of incentive for these people to do well, right? So, but yeah, I've just become fascinated by the ability to see these things. It is something that most people, it's, what do we call it? It's very polarizing. In Britain, we have a thing called Marmite. If you're in Australia, it's called Vegemite. You either love it or hate it. I don't know what you have in Canada or what you have in America, but yeah, it's not for everybody, but I enjoy it, and it does work. And as I say, it gives you an idea of what might lie ahead, and you can be prepared for it.
Just an FYI, Canada, we have beer.
Beer. It's a Molson, right?
Talk to me a little bit about AI, the large language models. How can they help with this? How can people, so there's a couple of questions in all of this. Is one, how can people, whatever industry they're in, because cycles is a vast, like we're talking about it in regards to the markets, but it's very vast. Like I remember when I was subscribing to the cycles, like the board that you're on.
The Foundation for the Study of Cycles, yeah.
Yeah. So the Foundation of Study of Cycles is put out like a thing, and I started like kind of, getting involved in it a little bit, studying it a little bit, or not studying it, trying to understand it a little bit better. And I was shocked and blown away at actually how many cycles, like in different genres there are that look at so many different pieces of information. So if you are, want to get really granular about the industry you're in, you can do that, correct?
Yeah. So the foundation, let's just explain. The foundation for the study of cycles was set up in 1941 by President Roosevelt. And the purpose of this was to see if the Great Depression, the 1929 top and the subsequent depression could have been forecast and therefore been dealt with better, because what happened then was we had the New Deal and we had all this poverty, and then we had the Dust Bowl as well. So it was set up by that. It's been going in different formats. It's been going pretty well of late, and we have created a load of apps there. And the idea is to research and put this out there. So it's a non-profit. It's there. It's a government agency originally, although it's now a non-profit that's been privately funded by volunteers. And yes, it does have an app in it that members get access to. I think it's only $200 a year to get access to the app, and we have weekly shows and everything with that, on using that either for trading or investigating whatever you want to investigate cycles in. But you talked about AI, right? So yes, you can put this stuff into AI. Now remember, anything to do with computing is GIGO, right? Garbage in, garbage out. So that's the first thing to bear in mind. However, AI is definitely streets ahead of anything else that's ever happened, right? I think the jury's out on it. I think you can do so much, but everything in the human beings, and when we think about how human beings operate, everything gets to a point, and then there's a synaptic link across the nerves, right? And that link, that synaptic link, I don't think has been completely replicated by AI right now. So I think it's pretty useful. I think it's a very good tool. And I think the benefits are not going to come from AI itself, but for those who happen to be able to use AI most efficiently and use it in the smartest possible way, they're going to be the net beneficiaries. Where AI is a real threat is in warfare now. Now, this is a big deal. So if we look at conventional warfare, if you look at aerial combat, if you're a fighter pilot and you're up against somebody else who's a fighter pilot from the other side, if you get shot out of the sky, you're going to die, right? That's it. Or maybe you ejector seat will work or whatever. So now there's skin in the game, right? There's skin in the game, and that's where war almost stopped, because it said, okay, you chicken out or whatever, or you stop because there's not going to be a win situation here. Mm-hmm. Same with armies, right? Now, take the aerial situation to the next level, which we've been operating at, which is like they're drones. But the drones, there's a guy sitting, or there's a couple of guys sitting in an airbase here, operating a drone over Baghdad or wherever, right, somewhere. And maybe he comes into conflict with somebody else's drone, right? Now, what's your mental state? You're actually over here 3,000-4,000 miles away, and you know that you're going to finish your shift at 6 o'clock, right? And you're going to go for dinner with your friends because you've got a dinner arrangement or something, and then you're going to go have some beers, right? What's the skin in the game there, right? So we've now got two situations where drone versus drone, and there is no limit caused by my own sort of survival wish anymore. Does that make sense? Suddenly there's no skin in the game. Take this a stage further, where you now bring AI in, and some of the stuff I've seen that I can talk about publicly, because I am working with some interesting agencies, is that, and I've had to sign off on that, is that it's whoever's got the fastest kill switch now is going to win this, and that's it. That's all there is in this now. There are, it's potentially the Terminator scenario in many ways, and that's pretty scary.
Yeah, it certainly deleverages the risk of war. When that happens, it makes it easier to make decisions to do, to make those decisions to go into war, to take, territory or oil or whatever it is that you're looking or need to get.
Yeah, it's an interesting, sobering thought there. Yeah, and maybe just it might, like you say, it might just be the solution to stop the war. Knowing that, because remember, this is a deterrent as well.
Yeah, that's a good point. You're not going to gain any ground because, AI versus AI and drone versus drone, and they really don't make any, meaningful traction one direction or the other. What's the point? Because the risk then is you just spend a lot of capital.
Yeah.
Like look at the capital that, you know, America is spending right now in this Iran situation. Like they are spending billions and billions of dollars.
Yeah. You know, so, you know, wars have been good for economies because they ramp up production, but this was just crazy, right? This one was just exponentially crazy. Now, wouldn't that money be spent better looking after those who can't feed themselves properly and house themselves properly and all the rest of it, rather than just to, you know, flex some muscles and show great, machismo, which is what this, you know, this was the most ill thought out operation ever, and I think it was based on people, appeasing other people's egos and things like that, or this belief that you could go into Venezuela and be out within 24 hours and do the same with the nation of 90 million people.
Right.
So, and that's a big one. That's a big miscalculation. Cycles show that is a miscalculation as well.
Sorry, how do cycles show that?
Because we've seen the repetition of things like the Gulf War, the Gulf War sequences, the Iran sequences, and so on. They weren't easy finishes. They weren't easy wins. So to look at cycles within context, you have to put them on timelines. Okay, so you have to look at, say, everything to do with America and its own war cycles, but you'd also want to look at all the conflicts between America and Iran. So they're different things, and where they overlap, you get clearer views. There are several timelines you put. And then if you look at the America conflict cycle, Vietnam was not a success for America. It just, drained the resources. There was obviously the draft, etc. And it got into a situation that it probably thought it would be out of very quickly. And that's exactly, or at least we're seeing a parallel here, that it got into a war that they thought would be over and done with very, very quickly, and they're not. Oil is not flowing, and there's still threats. And these threats are going to go through into the food chain, the supply chain. You know, you can't get fertilizer, we don't get enough grain. We don't get enough grain, we don't get enough, food, and so on. And that's one of the key issues with these things.
So I'm like imagining like how you track these cycles even, well, now, but 10 or 20 years ago. Like, I'm like, what did you do? Just have a bunch of circles? I can't even imagine what it would have looked like and how you would have tracked that. But AI has got to be helping you.
Definitely. Yeah. So for me, I think we should sort of make it a bit happier, raise the game, make it happier, as it were. Some of the things I like doing for fun is sports prediction and things like that. So before, you'd have to, looking for cycles just for fun to see if we could work out the outcome of a race or whatever. I'd have to go through.
How about the World Cup? How about the ending of the World Cup?
So who won it 60 years ago, right? England, 1966. England are through to the quarterfinals. I don't know. I haven't done enough. You'd have to look at the interim cycles as well, but we know they've been knocked out every time. There's only one cycle that suggests they could win it, and that's a 60-year cycle. And one cycle is not usually enough. So they could get lucky. But yeah, so I'd have to go through, and I have a massive book collection here, and I used to read through, make notes, and put them on pieces of paper, draw them on timelines, and have computerized timelines. Now, I will actually just start off by putting something into deep research or whatever and saying, give me a list of X, Y, Z and everything, and put them into a timeline for me, and do a basic sort of which cycles you can see. Then when I look at it, I can then synthesize it with the human eye and the human brain and say, actually, that one's more dominant than that one, which AI can't yet do. Or it might be it does, and I haven't figured out how to tell AI. Remember, I don't even know how to switch my microphone on here. So, yeah.
But so are you cataloging, like when we talked, I was just at a buddy's factory a couple of days ago and talking to his team a little bit about AI and where to start and all that kind of stuff. And I always say to people, like, you might not have the right tool accessible to you right now when it comes to AI, and specifically in your business. You may not have the budget. You might not have, a lot of things that can get you on the path. But what can get you on the path is recording the data that you have stored. And once you have the data stored, whether that's through, collection through, voice conversation, your sales teams, recording all conversations, like sales conversations, so that you can take that data in, and once it's in your large language model, and they can scrape it for data and find the key points, and how you built the emotional leverage to move the sale into move the sale forward in the process, or the inquiry call. Sorry. How are you doing? Like, how are you collecting your data? Like, are you collecting your data on on a regular basis, or what does that look like?
Market data we collect constantly throughout the day. Intraday
Right.
data and regular data. That's that there. The rest of it, actually, the broader cycles. We have our own software program that I didn't personally build it. I had engineers build it, but I created it. So that's where most of the data is, and within that. But to be quite honest, the simple geopolitical cycles and so on, that they don't really need too much other than a few notebooks or online notebooks, that sort of thing, and that's it. So it's just there. And I hate to say this, but it's a sign of insanity. It's all in my head. So I kind of have you ever noticed the way I change when I travel? You think. You see something about, oh, such and such anniversary, or this happened in 19 something, and you think, oh, whatever. So the next cycle will be here and this and that. And then if it's really interesting, you go and read a bit more and you think, oh, so that ties up with that one and this one. Therefore, that's the dominant cycle. Therefore, the most likely big change in trend for that nation is here, at this point here. So one of the things when we come to commodity markets is that, we know, for example, Ivory Coast is a big producer of cocoa, right? Now, if we can figure out every time the Ivory Coast destabilizes by coup or political intervention, that's the point that the cocoa market's going to see a huge rise in price. And that's the sort of thing we see. So that's the rationale. It's not just, I've got nothing better to do and I've got no friends and, I just got to sit here and study cycles rather than go and drink beer. The idea is there's a purpose to this stuff. The underlying purpose is that if this place destabilizes, what are the consequences of it? And some of the consequences are positive. It's not all doom and gloom. I want to really stress that.
Yeah, no, I mean, do you have examples of where it's not doom and gloom? Like, I mean, there are some positive sides to what you do, and being able to, like, where's the trend going? That's where you go, okay, this is where you want to be, or this is where you want to look in terms of the trend that you're looking for through cycles.
So I think basically the whole idea is that we, in terms of investment and that sort of stuff, look at the commodity markets, look at that sort of thing. I think where AI is going, that's going to be incredible, is if you're into computer gaming. A lot of people are into that. My kids are really into that, and that's going to move in leaps and bounds the way things are moving in it. What was it? 1990. I was over at Houston, at NASA in Houston, and they said, come and have a look at this. And they were using VR goggles then and things like that. And it was kind of like the very first iteration. And I remember having got the one of their flight simulators there that was so basic. And now you look at that sort of stuff, it's incredible. So there's the ability to learn stuff through simulation, the ability to just learn and grow through the transformation of knowledge and transference of knowledge. I mean, look, you're in Canada right now. I'm in just outside London, and we're talking as if we're sitting next to each other. So this is going to continue to grow, all this sort of technology. There's a lot of benefits, communication, the ability to sort of bond in groups, as we've been doing through the internet. But I think AI will help develop all this even further. I'm not sure where that's going to go, but I think AI is going to bring a lot of good things in. I think the other thing you want to think about, there are going to be a lot of professions that are going to be replaced by that. So what are you going to do in your time off, right? Hopefully you've got, the governments will provide the resources for you to be stable and have some degree of financial security, or you're an entrepreneur. I mean, I'd rather, people make their own money and so on, but you've got that money, go and enjoy it. You don't have to work so hard. One of the things I've noticed is in my cycles research, for me personally, I'm not having to put anywhere near as much effort in, partly because I've got the right team around me, and that team is able to generate the information I need far more easily. It's not like I got to get 2 or 3 researchers, and then when you had old-fashioned human researchers, well, they kind of missed the point. So I think there's a lot of benefits and growth there. I think also we would have to argue that when we look at aviation and just transportation, I think AI is going to make that more safe. We might remove pilots. I know there are plans already for single pilot operation on airliners and so on, but things are more safe, supposedly.
I mean, I'm sure you've seen this with your study of cycles. I mean, the world is getting better over time. It's a better place to live. Life is better than it was 50 years ago, 100 years ago, 150. Yeah. So technology, like so many people are worried about, what's going to happen and jobs and all that kind of stuff. It's like, we've always figured it out. That's what humanity does. And that's the stuff that AI, I don't think can replace. I think it can augment it in a good way, but it's going to be really cool to see what, you're going to be able to do. I mean, I think it's going to be interesting to see once you start really getting into AI and utilizing it with all your stuff, of how closely you can start dialing things in. I bet you what you do looks a lot different in 10 years.
Oh, for sure. It's already looking a lot different now. But let's just go back to one point you made. You made just now, saying, how people looked at things 50 years ago, 100 years ago, 150 years ago. Probably at each of those times, they were living the dream. They just thought, this is amazing. They never thought it was this good. So remember, human behavior is such that things are great. How did we ever live without an iPhone or whatever, an Android phone and things like that? And look at the level of anxiety a lot of people feel if they've lost it or left it behind, or that sort of stuff. So the other side of it is the ability to detach from this. And I have to say, not last summer, summer before, I went out to see some friends in Ireland, which is a place I love because there's not a lot of Wi-Fi out there. There's not a lot of anything. And then you suddenly realized, actually, you just got the computer out and the iPhone out for a couple of hours just to stay tight. And then the rest of the time, you're just driving around, walking around, going to the pub, eating food, drinking Guinness, enjoying the views, getting on the boat, whatever you want to do, go fishing. And actually the ability to enjoy all that stuff. So I think it's important to understand that's still there. That's a very important concept of what life is all about, and not to be swept up with all of this.
That's 100% agree with all that. Dude, great conversation, man. Anything you want to leave? Like we got to get all your details for sure.
Yeah, so we'll get all those over to you. And
how do people find you right now?
Okay, so you can go to markettimingreport.com, and there's a whole series of things on there. That we have our newsletter. If you want to learn to trade at the same course that we very successfully ran a hedge fund with, the last year we closed up, what did we close up? I'm trying to think. We closed up 34%, and we beat the S&P by 47% the last year around that. Same techniques are in that course. We have our Seasonality platform, which gives you high probability trades. We have our Smart Money platform. If you're interested in grain trading, we have grain reports, and there's all sorts of bits and pieces there. That's all there. Have a look at the website. If you want to know more about the cycles that I've been talking about, go to the YouTube channel. I think it's called Market Timing Report. It's Andrew Pancholi. You'll see a series of lectures, presentations, and you'll see how these cycles fit together. And that way, if your eyes sort of glazed over or your eyeballs went back to front and everything, you can see how we put it together. And it'll make sense. And at that point, hopefully you'll get more interested in this stuff. We have Instagram, we have LinkedIn as well. And what else? I think we have something else. And we have our Chief of Staff, Dr. Jenny Hott, whom some of you will be familiar with. She's got all this under control. So we have actually got, you can download some PDFs that we've just created, markettimingreport.com/VIP. Very important person. Do that. And that, I think, Dwayne, you asked for earlier, where we show how the cycles repeat. I did write those the other week. There's 2 or 3 of those, so you can do that. And I say a key point to end with is that if some of this stuff sounded a little heavy and negative, don't be worried, because after every down cycle, there's an up cycle. All right, that's the way it is, and it always will be. There's, nothing ever stays the same. There's always positives in everything. And if you understand this stuff and it helps give you an advantage, protects yourself, then life's really good. So then it's been worth me turning up. So thank you so much.
Yeah, I look at this stuff. It's like, look, there's always winter, and then there's always spring. It's never stopped since the history of time. Things move in ebb and flows, and this kind of information is like buying a generator for your house. You'll be really thankful you have it when winter comes and the power goes out and it's freezing cold in your house, and you just turn it on, and it's like, it's information, guys. So I mean, this has been an awesome conversation. Yeah, I mean, anybody who's looking at this like it was a dark or negative conversation probably needs a little more light in their life, because to me, it was an informative conversation about how to be responsible for what happens in your own life, and knowing that you actually do have control. You have influence over yourself. And this conversation, I think, is really about understanding, what, and you said it really good actually about, about the technical versus, and this is related to the markets, but I think it's related to life. It's like, what you study is about prediction, not about past information and making your decision on what happened just in the past, but also what's supposed to happen in the future and what it might indicate. So I think it was a great conversation. I love it so much, man. I appreciate your time, and you're a great friend. I love you to pieces, and thanks for spending the time with us, bro.
Oh, thank you so much for having me back, Dwayne. It's been a lot of fun. I look forward to seeing you for a few beers soon. You take care, and thank you again.
Okay, buddy. We'll see you soon.
Take care.
Thanks for listening. I appreciate you being with us. If you found value in the show and know a friend or coworker who could benefit from this conversation, please share the link. Remember, each share creates a ripple effect of knowledge and inspiration. And if this podcast has supported you in any way, please support us by clicking the follow or subscribe button.